And now we're looking at the Ringman Family Trust. So this is the last of the shareholders of Cassie Tapes. It says the Ringman Family Trust was created in 2014 by John Ringman. See above, remember the person we looked at above? And his father, Gareth Ringman. The trust was created for the benefit of John's children, which are Gareth's grandchildren. The beneficiaries of the trust are Alex Ringman, is 33 years old. She immigrated to Australia in 2015, so this is a non-resident. She returns to South Africa each year from 1 March until 31 May, so March, April and May. So March is 31 days, April 30, May 31, so that's 92 days a year as part of her Australian job requirements. During this time, she typically stays with her parents in Johannesburg, but she occasionally also visits Cape Town and Durban. Savannah Jones is the next beneficiary. She is 16 years old, so she's a minor. John and his wife legally adopted Savannah when she turned 14 after they had spent several months with her as a foster child. Now, if you legally adopted the child, it's treated as their own biological child, basically, for tax purposes. At the time that the trust was created, Gareth, so remember that's the father of John, the grandfather of Alex and Savannah, donated his investment in a money market portfolio to the trust. Okay, so important, look at the word donated. The money market account generates interest income exclusively from South African institutions. The institutions do not include banks or the government, and it is solely focused on listed debt instruments. Now, if you're reading that, what does it remind you of, make you think of? It makes me think of section 50, the withholding tax on interest paid to a non-resident. There it says there's no withholding tax if paid by banks, the government, or in respect of listed debt. So far what we're actually seeing here is that there will be no withholding tax. Now, important, Alex is the non-resident, so that's why we're considering this, or why it made me think about it. Did it make you think about that as well? Okay, the interest is is accrued evenly through the year. Alex has a vested right to receiving a payment equal to 45% of the interest generated by the money market account. Vested right. Okay, no person has a vested right to the balance of the interest, and the trustees may use the discretion in distributing the income. Now remember, when we're looking at a trust, we have to ask ourselves, was there a donation, and is the donor alive? If we say yes, before I say tax the donor, we ask, does section 7 apply? If we say yes, we tax the donor. If we say no, so there was no donation and the donor is not alive, then tax person with vested right, or person received discretionary payment, or the trust if it's retained. That's the same as if we say, does section 7 apply? No. Okay, so let's look at Alex. So this 45% that Alex is entitled to. Was the donation to the donor alive? Well, Gareth was the donor, so there was a donation. He was alive at some point. Yes. Does Section 7 apply? Yes. Section 7(8) will apply. It's to a non-resident, so the donor will be taxed. Okay. But over here, Gareth Ringman passed away on 15 November 2018 at the age of 94 after a brief illness. So what that would mean for us is the following. From 1 March 2018, it's the start of the tax year for the trust, to 28 Feb 2019. We have here 15 November 2018. Donor can be taxed, and then donor can't be taxed. Okay, so just bear that in mind. Then, John Ringman sold the share portfolio he had received from his wife to the trust at its market value. Now, let's just remind ourselves what happened here. If we go to John Ringman, it says here the share portfolio. Remember, he sold it at its market value on an interest-free loan. So that is considered a donation or a similar disposition. So Section 7 will apply. The share portfolio generates dividends from local companies. The trustees was amended to indicate that Alex and Savannah are each entitled to 40% of the dividends earned by this portfolio. The balance should remain in the trust until Savannah reaches the age of 21. At that time, it should be distributed equally between the remaining beneficiaries. Okay, so 40% goes to Alex, 40% goes to Savannah. There's 20% left. Who has a vested right to that? No one, because they tell you it will go to the beneficiaries when Savannah turns 21, and then it will be distributed to the remaining beneficiaries. Now, if Savannah doesn't turn 21, or if Alex passes away, or Savannah passes away, any of those people, then they won't get it. So no one has a vested right to it. The only other asset that the trust owned was the 25% shareholding in Cassie Tapes, and the base cost of these shares before the liquidation was $350,000. The income and distribution statement for the Ringman's Family Trust for the 2019 year of assessment is provided below. Now again, I'm reminding you, this tax year for the trust ends on the 28th of February 2019. That liquidation from Cassie Tapes that they have here, remember, that took place, they received the distribution on the 31st of October 2019. So that is after the 2019 tax year for the trust. Okay, so that's why we're not seeing anything here. So here they show the interest and the dividend income and so forth. Okay, that is it. And before we continue also, and we start with looking at the requirements, please remember also, guys, again, for the purpose of this question, I've provided you with tax rates and tax tables which you should use. These are not correct. They're my own invention, and it's just for the sake of this question. In an exam, you should use the latest Psycho Student Handbook, or you should use the rate provided to you in the exam. Okay, again, the principles here work the same, so focus on the principles. And if you answer this question or want to answer it using the actual tables, correct tables, that's fine. Obviously, just take that into account when looking at the solution. So in our next video, we'll start with the required.